Welcome back to Your Average Investor. We're going to talk GameStop, Big Lots, AMC, SPY, and a few other stocks today, maybe some Children's Place, review the challenge account. This has been an absolutely wild run. If you haven't already, please subscribe. And I want to know, what's your prediction on GameStop? And you got to back it up with what you own. Do you own any shares of GameStop, or are you short any shares of GameStop, right? It's one thing to say, I think it's going to moon. It's another to say, I think it's going to moon, but I don't own any shares. Same thing to say, I think it's going to crash, but I'm not short. So you got to back it up with your position. You know our position. We own 300 shares. I'm selling covered calls on those shares to generate premium. This is my break even right here, about 25.07. And this right here, actually that green line represents my average purchase price of those 300 shares before premium adjusted. And then these other lines, these hash lines, are where I've sold calls. I sold a call 40 and a call 70. Then I've got 100 shares that are not currently covered with a call or covered by a call. So GameStop, the last couple days, it was kind of painful. There was the live stream event, crash, burn, and then the miraculous, marvelous rally today, up 22.8% at close, up more in after hours. This was funny. I was actually recording this video, and then I had to re-record it because I messed up. And I caught this on camera as this big bar happened. We were sitting talking about GameStop, and all of a sudden it goes, and it just doesn't stop going down. And then it hits 28, and then just boom, massive rally right off of 20. Like, what a buying opportunity right there if you were watching that and had some dry powder to deploy. Just a quick $2 per share. Anyway, you know our position on GameStop. I do think that it is being manipulated by the market personally. This is not investment advice. I'm not going to recommend what you should do. There's inherent risk with all investing, of course. But I do think it's pretty abundantly clear that this stock is very heavily manipulated. And anyone who says otherwise, I think, is ignoring the evidence. That's just, quite frankly, I think it's nearly irrefutable evidence that the stock is manipulated. Regardless, I like the position. I'm continuing to sell covered calls on it. I don't know if I agree with the whole idea that, oh, GameStop's going to squeeze to $5 billion, million, trillion, quadrillion dollars per share, like some people say. I could see it hitting like maybe $500 a share, right? $500 a share pre-stock split, that'd be $2,500. Like, that's nuts. But I mean, I could see something like that happening in a massive short squeeze rally. Maybe 1,000. I don't think it goes much higher than that. But I could see like $1,000 a share. And if it does that, it's gonna rattle things hard. So anyway, GameStop's really interesting. I love the rally today. I think anything under 25 is a massive buying opportunity right now. I think 25 is kind of the new floor. Yeah, there's some dips below it, but again, that's going to get eaten up pretty solid. Right along with it is AMC. AMC is really interesting because it's kind of tracking GameStop, but it's not fully tracking GameStop, right? Like, they had the initial big surge here, and then they sold off, but they didn't sell off as much as GameStop did, and then they didn't participate in the second rally as much as GameStop did either. Instead, they're just kind of hovering here between like $4.5 and $5.5 per share. And so this is a really nice channel that's forming. What I'm doing right now is anytime it pops up to closer to $6, above 5.5, I'm selling covered calls. And then as it falls back down to like the 4.5, I'm buying them back. And I'm just doing that over and over. I've got 200 shares of AMC that I'm playing with, doing that. My average on it is actually $7 or so per share. I don't have a great average on it because I've been holding these shares for a while and just kind of forgot about them. But I've reduced my cost by about $1 per share just by selling premium. So like my true cost is about $6. But that'd be like my break even is if I got exercised at $6. But what I'm doing though is on these rallies, I'm selling covered calls that are about 30 days out with a strike price of 10. So if it does jump up big, I just get exercised at 10. I make a bunch of money. I walk away. But if it doesn't, then as it drops, I buy those calls back and just rinse and repeat. So like an AMC as well for the premium, but I'm not liking it as much as GameStop for the long term. It is interesting though, and again, let's go back to where we're familiar with here. Let's look at here's the premium, right? This is just nuts premium, like 31 days out. Look at this, cash secured puts for 5. You could get $100 for this. It gives you the stock at an average of $4 a share. If you wanted to go like way less risky, sell the put 4s. And again, not investment advice, but you could, if you sold the put 4s, you make $35 on that. That's nearly 10% of the strike. And if you got assigned, you'd be owning the shares at 3.7 per share. after adjusted for premium. So it's like that's such a good deal if you think the company's going to have a turnaround. Now they've got some risk, obviously, with debt and other things, but phenomenal opportunities potentially. Now, speaking of that, Big Lots. Big Lots is really interesting now. You remember, I didn't want to get in on the challenge account with this initially because I was worried about exactly what happened. After earnings, they'd have another big dump, and that's exactly what happened. They had earnings. They dumped from 3.5 down to 2.26, low of 2.19. And it looks like in after hours, they're back down to like 2.23. So what I'm looking at here is to see if there's a good opportunity to take an entry and just kind of chill on the shares for a little bit of a rebound. What I'd like to see happen first is that it starts basing here, right? And then if it starts basing, I'd like to see a rebound. The nice thing is up to $2 a share to $3 a share, you're up by 50%. So like 2.2 to 3.7, you're up by 50%. What I would love to see is a rally to $5 per share. If I had to get my like ultimate wish on this for the challenge account, I'd buy around 2.3 as it bases. So we'll call it 2.3. I spend 100 shares on it, so $230. I'd get it to double to 5.6, and then I would sell half of the position, and I'd let the other half ride free while I free up the cash, because the premium on these, it's not great. And so covered calls, cash secured puts, you get, it's okay, right? Like I could sell this cash secured put for $10. That's 5% over 38 days. That's not too bad. Nothing here, of course, for these ones 10 days out. And then if I bought shares and went for covered calls, I get $15 here. Again, that's like 6.5% return based on or just on the premium, right? Not including any price appreciation. If it got exercised, let's just do a little quick math, right? So 250 is what it would be exercised at minus 226. So I'd make $24 plus premium of $15. I'd make $39, and the initial buy-in would be 226. So I'd make 17%. Like that's a great return over 38 days, 17% if this gets exercised. But that's the question, is if, right? And that's why I want to see the price start basing first, which today's looking promising. It looks like, if you look at just the chart yesterday it just continued to sell off all day. Today it opened with a little bit of a sell-off, but then it mostly just based. You can see, let me zoom into just this. You can see it based here at like 2.22, and little pop up, and then based here at 2.27. So that's encouraging to me, and I may consider grabbing 100 shares. Maybe just sell that call 2.5 and go for a quick flip there if it gets exercised. But I'm liking Big Lots more and more. And remember, like look at this, right? 4.6 billion in sales. Yes, they have negative income. They need to cut expenses. So their market cap though is 66 million on 4.6 billion in sales. Short interest 23%. Cash on hand, cash per share 1.49, right? And then the book value per share is what's nuts. $9.73 book value per share. So let's just say they bankrupted and had to like liquidate everything in an auction. Obviously, they're going to get pennies on the dollar there, but you're getting more than, you're probably going to get $2. So that plus their cash on hand, maybe they bankrupt to $3 per share as a bankruptcy cost. But the other thing that's interesting, again, you go down here, there's not a lot of buying, but there was some recent buying. December, the director bought 1,200 shares. And I actually, watching Hello Kitty's videos, I came across a new, I think it was Open Insider. Yeah, here's Open Insider. Is this it? Open Insider. Here we go. So here's Big Lots, right? Big Lots, we've just got buying, and it's not super recent. This is last year. This is December, but you've got some buying and you don't have any selling. So, and this right here was actually quite a large purchase by the CEO, 51,000 shares. So they bought 51,000 shares at a price of just under $5 a share. That was a $250,000 purchase. That's a very big positive signal for the company, and that was back in June of 2023. So June 2023. Now we're getting it. You're getting it at half the price of what good old Brucey bought in at. So I'm thinking that it's pretty interesting. Now, right now we're in Children's Place with the challenge account, PLCE. In fact, let me pop over to the challenge account right now and turn this off. So here's the challenge account, right? we've got this one Children's Place call that we sold for 125 bucks, and it's currently, we're down on the position technically, and that's fine. I'm just planning on writing this out till expiration for a nice 10% gain over a course of a month. But I've also got about $233 in, gosh, now I'm talking myself into this. Shoot. Do I just buy? I've got enough to buy 100 shares right now. I'll do another video if I buy a specific video for the challenge account. But I've got enough for 100 shares just to let that ride, so I might do that. Speaking of challenge account, some other plays from the challenge account, just as an update, Jumia, just massive rocket off of this volume weighted average right here. Big move up. I thought we'd see another pullback before bounce, but it's just cruising. More of like what happened back here. I'm expecting, it's just, I think we're in an uptrend now for Jumia. I think the dips are buying opportunities now. I think we're in an uptrend. So I would expect another pullback to happen and maybe come back down to this 5.5 range. And that would be, or even the $6 range possibly. And I think that would be an interesting buying opportunity. Now, the only reason I hesitate there is because the market overall is pretty ripe for a pullback. And in an overall market pullback, everything sells off, including, you might have a great company like Jumia, and Jumia maybe is even attractively priced right here. Who knows? But look at the S&P 500. I want to show you what I'm seeing here. I know I've done another video on this, but I'll show you. I'll go into just one more piece of detail here. So again, we hit all-time highs today. Opened lower, sold off, rallied to all-time highs by the end of the day, and even more in after hours. There's a lot of global tension right now that could throw a big hammer in things. I mean, like, you look at, even just like, look at the VIX, right? There's like no volatility in this. Look at this. Look at this. We're sitting down here, like, this is the bottom of the volatility readings. Like, you would expect a little more volatility maybe, considering all that's happening with Israel and Hamas and China, and the fact that the S&P 500 is kind of consolidated into NVIDIA, Apple, Microsoft, Netflix, and maybe a couple others right now. But you don't, right? There's no volatility, or at least the volatility index is not showing any volatility. That to me is really surprising. The other thing that's really surprising is this. This is margin statistics reported to FINRA, and they haven't come out with May's yet. As soon as they come out with May's, I'll update on that. But we're sitting at 775. The rate to read this is in millions, so you add 6 zeros. $775 billion in margin in the market right now. This isn't cash in the market. There's way more cash in the market. This is margin. People using margin to buy extra shares. And of course, margin buying is great when the stock market's going up because you get to leverage your positions and you get to get more money. But as soon as that starts going down, things get hairy. People start getting margin called. And anytime the margin, you can track this back. They've got, if you want, you can download all the historical data. Download the data button on the right. Oh, right here. You can download this data. What I did is I downloaded it and mapped it into an Excel graph, and I overlaid it on the S&P 500, and it basically mirrors exactly with the ups and downs, which is not surprising because it's not a leading indicator, right? Like, it's not like margin's going to go down and then the S&P goes down. But if the S&P goes down, margin goes down with it. And when there's exceptionally large amounts of margin, this is the important thing. When there's exceptionally large amounts of margin in the market, the drawdowns are sharper and deeper. When there's not as much margin in the market, you might get a little drawdown, right, like that or something. When you have a lot of margin in the market, big, fast, steep drawdowns happen. And we're getting to the most I've seen, the most that's been recorded is like $940 billion. That was how much margin was in the market back. Let's go back to this chart here. Back here, $940 billion, sell off, and then it came down to like $600 billion or whatever. Now we're back to, I mean, when they report May, I'm guessing we'll be somewhere in the mid eights, like 850 billion, maybe even close to 900 billion again. And that's going to be an interesting number to watch. You know, it gets up to $1 trillion margin in the market. Boy, that's going to cause a steep sell-off when the sell-off happens. Now, there's some other indicators, I think, that suggest a sell-off is potentially around the corner, such as the fact we've been trading in the middle of this channel for the most part, a little bit of a breakdown, and we're coming up towards the upper bands of that channel again. And then lastly, if you look at from, let's just change this time frame back to the year time frame. We're going to go max available. Look at just the last several years, right? Green, green, flat, green, 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 flat, green, green, small sell-off, green, 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 big sell-off, immediately bought back up, and then another big green so far. Now, this kind of a rally is absolutely exceptional, right? So like if you bought after the 2008 crisis, or you bought them, you didn't even nail the bottom, so you got in at $100, right? You're 5x right now. You've just had massive gains, which also I think kind of makes sense due to the fact that the GFC also mirrored the dot-com boom, right? So you have the quote the lost decade. I would call this decade the making up for lost time decade here, where it just was like, whoop, we're not going to go red at all until here we finally had like a decent red year, but then it was just immediately bought back up, and we're now sitting all-time highs again. You could say this is due to AI and technology and all sorts of other things, new paradigm, etc. But generally, things are looking a little bit toppish. And so I wouldn't be surprised to see a sell-off happening soon. Soon could mean next week or within the next 6 months. I also think there's enough concentrated market risk with political factors with the U.S. election, again with China, Taiwan, Russia, Europe, all sorts of different things happening globally. That seems like any small little hiccup, and this starts selling off, and then people start getting margin called, and then it sells off more, and then more people get margin called, and then it sells off more, right? So I'm expecting at least, and this is just my opinion, it's not trading advice, it's not investment advice, I'm expecting we're flat and chop from here. I would be very surprised, pleasantly surprised for some of my investment accounts, but I would be surprised if we continued to march on up towards 560 or 580 by the end of the year. I think we just chop around here between 500 and 530. So interesting risks coming up. Other things that are happening that are really interesting to me right now, I'm going to go over just one more, and then we're going to close, and is Bitcoin, right? So this is fascinating. Let me change this chart. Let's go 2 years, 1 day again. Or I guess I could have just gone back here. So here's Bitcoin, right? Flirting with all-time highs again. And on the flip side, we've got miners like Mara, right? So Mara, not quite flirting with these recent highs. These aren't even all-time highs, I don't think, but recent highs. But it's kind of up there. Then you've got IREN just rocketing, right? I wonder if this is going through some sort of short squeeze, because look at the volume, right? This is the other thing. So notice how the price is up, and the price is up on big volume. Like this isn't, like look at the volume, right? Big volume, bigger volume, big volume. The price is up on big volume. Just back to the S&P 500 real quick. Notice the decreasing volume, right? Price is up, but it's not being supported by the volume here. Very interesting to watch that. Anyway, back to IREN. So you've got IREN up, then you've got like RIOT, right? RIOT's kind of like one of the classic miners, and it's struggling. It's just having a real hard time. It's been consolidating on 10, but here's what I like about it. And this is where I was considering. I had a really hard time choosing between RIOT and Children's Place for the challenge account. Ultimately, I chose Children's Place because there was more premium on the contract. But here at $10, or like just under $10, you've got this nice base here. You've got another support back here. It was acting as resistance before. Another support here. Broke down briefly, coming back up. And now we're just kind of basing again. And if you zoom in a little closer, like you might even say that maybe we're getting a little bit of a bull flag setup, right? If I were to add a little line here, and then a little line here. So, are we getting some sort of bull flag setup where this is going to break above and move strong up again? I wouldn't be surprised to see it. I'm not personally in... Actually, no, I am in RIOT. I've sold some cash-secured puts on RIOT. So that's how I'm playing RIOT right now. I'm in on cash-secured puts at actually 10. I think I've got a put 10 that expires at the end of June or something like that. No, I don't know when it is. Anyway, really interesting to see that there's that divergence happening among Bitcoin miners right now, right? RIOT, Mara, IREN, where IREN is just soaring. Mara is doing okay. And then RIOT is just kind of puttering along down there at $10 a share. So it'll be interesting to see what happens, especially if Bitcoin can manage to hold these prices and even potentially rise to new highs. I know there's a lot of people getting hyped about $100,000 Bitcoin by the end of the year, which would have seemed ridiculous, a few months ago, or at the beginning of the year. You could have gotten in $17,000, $16,000, and be up 5x or so right now. So it's interesting to see what will happen. It's also interesting to see how the volume weighted average has started acting as a phenomenal indicator to get in on dips or to get out on rallies if you're playing the upside volume weighted average. Ever since institutions started buying, BlackRock and JP Morgan and all those that started buying, they've got the Bitcoin ETFs now. So interesting things in the market. Hope you guys are having fun out there and making money. We'll always keep you updated on what we're doing. And as always, hit that subscribe button if you haven't already. Catch you next time.